Let's go over my very expensive tax bill. I know that most people think getting a large tax bill at the end of the year is not ideal, but I want to remind you that if you're getting a massive return, you're absolutely doing it wrong. I just paid my taxes yesterday, so let's go over exactly what I owed. My adjusted gross income was $120,774, and last year I did pay estimated taxes. You have to pay quarterly if you're a business. I paid $2,600 to the IRS. What I didn't know is that I was supposed to be paying estimated state taxes as well, so I wasn't doing that. Since I'm self-employed, I get 1099s, meaning that the payments I receive have no tax deductions. So I have to pay taxes on all the income I received this year since no tax was withheld. I need to pay income on my interest that I earned in my high yield savings account, as well as short-term and long-term capital gains tax that I earned from stock sales. So with my adjusted gross income of $120,774, I owed $13,697 in federal taxes and $4,635 in state taxes. This might be a little controversial, but I did pay my federal taxes with a credit card, and there was a 3% fee, meaning that fee was $341.06. But I did this because I was trying to hit a minimum on a credit card. So I put my federal taxes on there, and in exchange, I got 90,000 points, which is equivalent to about $1,200 worth of travel. So in my opinion, paying the $300 fee to get the $1,200 worth of travel is a good deal. I also had to pay $292.20 to file my taxes. So in total, I owed $18,332 in taxes, and after the taxes plus the credit card fee and the fee to file, my total is $18,965.26. Next year, I do want to explore opening a solo 401k that will help reduce my taxable income. And also I want to spend a bit more on my business because my expenses were really low this year. I know that most people think getting a large tax bill at the end of the year is not ideal, but I want to remind you that if you're getting a massive return, you're absolutely doing it wrong. Your money is going to work harder for you in a high yield savings account or in a brokerage account all year rather than sitting with the IRS. If you're getting a big tax bill at the end of the year, it means that you overpaid to the IRS and they're just giving you this money back. Whereas if you had that money all year, you could have been investing it and making that money work harder for you. I had this money sitting in a high yield savings account all year, so I've been making about $400 or $500 a month, and I just took that out of my high yield savings account to pay for this, and I wasn't surprised. I planned accordingly. I was able to make money on this money versus it just sitting with the IRS.